You're like, what? Oh, there's an IMF meeting today? Did you catch that? Oh, it was crazy. That's what moved the market. Anyways, hey, we have inflation. Who's that right, eh? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonald. I'm a currency trader just like you. Oh my God. So what time is it? I guess it's 9 o'clock in the morning. My back's already sore. I've had 2 cups of these. And by the way, I have a small head, but this is a big cup. I've had a bowl of soup and I've eaten a steak. 9 o'clock in the morning. Who's that for? Teenagers? But anyways, right? Anywho. Matrix. Anywho, yeah, so look, we got inflation in the United States of America and the rest of the world as well. Shouldn't be a shocker. So, hey, we went through a period of vacuum. The vacuum is now being filled. That's really interesting. So we'll use the next 45 minutes to an hour to do what technical and fundamental analysis. We'll try to create some trade plans. Look, this is all what's happening now. You should have had planned out a week ago. So I'm not going to put you in chasing price around. That's amateur hour. I'll leave that to the other teenage Forex live streamers. And instead, we are just following plan that we've actually had for weeks, not just hours or even minutes. So whatever. So ask me questions. I'll do my best to address them. Let me know how it can help. That's why I'm here. I'm more than just a supermodel, of course. I have brains too. So I want to share. If you look in the description below the video, there's a link to my book. There's a link to FX Bootcamp, which has video training courses. There's a link to, I believe there's a link to the Trader's Way YouTube channel, the FX Bootcamp YouTube channel, you're on the Forex.Today YouTube channel. Those alone have thousands and thousands and thousands and thousands and thousands of videos. Even FX Street, I don't believe I have a link down there, but if you're familiar with FX Street, I was Speaker of the Year back in 2016. And you're like, 2016? That's a long time ago. Actually, we're approaching, I've been working with them 18 years, I guess, doing, just making myself available to fellow Forex traders for 18 years. So anyway, so there's a lot of resources. There's no need for you to reinvent the wheel. There's no need to freak out about market conditions. But you should, if you haven't already, start seriously digging in and getting this thing we call Forex under control. It's a great opportunity. Again, in the description below, you'll find a link to a broker. The one broker that has earned my loyalty and respect through their actions. So if you're like, hey, Wayne, because I get this question a lot too, right? Like, hey, Wayne, what broker should I use? Well, first of all, do your own due diligence. I'm not your mama. I ain't your papa. But look, Trader's Way earned my loyalty and respect through their actions in the market, not through an ad, not through a banner, not through any sort of advertising or marketing scheme. When the market was duress and other brokers went out of business, Trader's Way was just fine because they are actually doing their job properly. And I'm like, pa-chow, pa-ching, earned my respect. So, hey, you can check them out, see what you think. Maybe they earn your loyalty and respect too. That's tradersway.com. Link is in the description below, but if you don't want to click the link for whatever reason, don't click the link. Just type it in. Okay. Will FX markets move more? Of course, NP. That's the whole point. Okay, let's take a longer term point of view here. Okay, pound is regaining. We can see that. I don't have any pound short trades anymore. I got knocked out profitably on the big one down. And then the second wave down, I had some trades on that. And now, but this upward move here and then the next upward move, of course, I'm not on. So that's interesting. We can see Aussie dollar remains to be something to be selling, which I have been. That's great. Kiwi looks like something that should be sold as well. Great. That makes sense to me. CAD comes and goes. So I'm really disappointed, but I guess just further demand destruction is just not good for kitty CAD. Plus, they got to jack up their own interest rates because they have to follow the Fed at the very least. Yen is weak again. It has been. Well, I'm not sure how it'll impact things today. And then dollar. Okay. I don't believe the dollar's strong. Okay. But this is a dollar index, which is appropriate in particular for this currency. Okay. The dollar is a pricing mechanism for everything on the planet. It's a reserve currency. The reserve currency. It's unique. Okay? So put it this way. The stock market is falling and the bond market is falling and the dollar index is going up. That means the dollar is strong, right? I don't believe it to be true. So think of it. If investors were buying the dollar, they would be doing something with it. They would buy the 10-year T-note, for example, that today, just minutes ago, hit 4%. That's massive. Now it's on its way to 5, in my opinion, but whatever. That is massive. Massive. But that tells you that bonds are falling. Now, there might be a blip today because people want to lock in 4%, but whatever. If bonds are falling and the stock market is falling, remember, I'm triple leveraged short the stock market. I triple leveraged short at the end of the second quarter and then again in the middle, like around July, I guess August, probably closer to August. I triple leveraged shorted the stock market. So I want you to think about this. This is important to a Forex trader. Other traders probably wouldn't get it. It doesn't make sense. But if the bond market is falling and the stock market is falling and the dollar's going up, that means foreigners in particular, are buying the dollar, right? But how could foreigners be buying the dollar if they're selling the bond market and they're selling the stock market? And I don't think they're putting money into real estate, are they? We're talking about foreigners here. Remember, the only way to make the dollar, well, not really, but in foreign exchange purchases, foreigners would be buying the dollar and then converting it to an asset. But assets across the board are falling. So what is a major force to this upward trend then in the value of the dollar? What could the major force be? What could make the dollar go up in value if foreigners, dare I say, are not buying the dollar. If bonds are falling, foreigners are not really buying dollars to buy bonds. And if the stocks are falling, well, then foreigners are not buying the dollar to buy the stock market. Well, no, I mean, there's something else going on. It's not inflation. Inflation would make the dollar weak, Jazz. So I want you to think what is unique about the foreign exchange market that could show price going up, but nobody's buying. Now you could argue that maybe foreigners are buying the dollar to put in their central bank. Okay, maybe, yep. But they're not buying dollars and then buying bonds. They're not buying dollars and then buying the stock market. They're not investing. They're doing something else, right? Foreigners might want dollars to purchase oil. Yep. Edward says taking profit. Yeah, but we're talking, this has been going on for years now, right? So there you go. That's what I'm going after, Frank. Remember, the foreign exchange market is relative. So what we're showing is the price of euro, the price of pound, the price of yen, the price of Aussie, etc., 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 is down, 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 down. If the dollar was neutral, like, let's say, gold, an ounce of gold today was an ounce of gold yesterday, was an ounce of gold last year, was an ounce of gold in 1976, was an ounce of gold in 1876. An ounce of gold is an ounce of gold. Okay? So you could almost look at this as like $1 of $1. Okay? So relative, if the dollar didn't change value at all, okay, it's worth more versus euro. It's worth more versus pound. $1 buys more yen than it used to, but the dollar is the same. Yen is cheaper. In terms of dollar, Australian dollar has gotten cheaper and cheaper and cheaper and cheaper and cheaper. And you could say the whole time dollar was fixed because it's a unit of account for the value of the other currencies, is one way of looking at it. Zach says, so everything is weak. Dollar is just the least weakest. Well, it's got its own challenges, but let's say the one thing that's unique, Zach, is that the USD is the reserve currency. Okay? The Australian dollar might be strong against a different currency, but we don't care about a different currency. Okay? What about the Djibouti dollar? I don't know about Djibouti. Okay? So we have to say, well, in terms of what? Literally, in terms. That's what the term is. The term, in this case, is the dollar. So you could say euro, the value of euro versus gold. It's whatever your unit of account is. You could do it in Bitcoin if you want it. So yes, the dollar has changed in value, I'm sure. But one of the things I wanted you to think about are investors around the world buying dollar to buy American bonds? Well, we don't see that. The bond market's falling. Are foreigners buying US dollar to buy the stock market or real estate or some other asset? It doesn't appear so. Now, they might be buying dollars for the sake of holding cash. Maybe. Why are they making that decision? Maybe because it's a reserve currency. Maybe because it's a large economy. Maybe just simply, like I said, it's a reserve currency. You want to keep this in their bank, in particular if you want to buy commodities. Why would you want to buy commodities with dollars? Well, that's what a reserve currency is used for. So if you want to buy aluminium, as they say in the UK, and you used to love your Russian aluminum, now you got to buy aluminum from somewhere else. Okay? Very often it's priced in dollar. The contract is actually in dollar. So maybe you need to have some dollar. Okay? For example, let's say you're going to get your aluminum from India. And you're like, well, you're going to place a contract. You're going to get your aluminum in 6 months, but so what if the value of the rupee changes? And what if the value of, so let's say if you were British, what if the pound changes value? What if the rupee changes value? And then how do you hedge that? Like, wait, you want the pound to go up, so you want to hedge on the way down, or maybe try to leave that one open and then just hedge the rupee. But maybe rupee's not that easy to hedge, and capital controls and all these different things. You're like, what? Well, let's just price it in dollar and hedge with the USD. Done. Okay? Hope says, yeah, you can't buy aluminum in the UK. Yeah, that was announced last night. So anyways, I just want you to think as a foreign exchange trader, it's possible. Now, obviously, this isn't pure. Like, somebody is buying dollar. But I want you to think about the big picture here. They're not buying the bond market and they're not buying the stock market. And so you can kind of say, generally speaking, nobody's buying the dollar, except if you're going to keep it in reserve in your central bank or something. But that probably was normal anyways. So are foreigners plowing money into the U.S. economy because it's a safe haven? No, not really. But relative to what's happening in other economies, the dollar looks good. It looks good. But really, you could argue nothing's actually changed. The US dollar has done nothing. But Aussie's collapsed. Okay? So anyways, again, I hope to bring another point of view. Let's take a look at the commodity. Jazz says 30 trillion in debt is insane. Yeah, that sounds insane to me. Okay. Once again, I've argued that this is deflationary. We're in a deflationary period and that you should be selling gold. And you're like, but wait, Wayne, we just had CPI and it's up, right? Or it's not down as much as everybody thought. But some numbers are down, some numbers are up and all this kind of stuff. And it looks really bad. And I would say that is true. It's deflationary. You're like, but if we have red hot inflation, why is it deflationary? I don't care about what is. I care about what is happening. So in response to that, the central bank creates deflation, has policies to create deflation. You shouldn't be hedging after you have inflation. Okay? You don't buy house insurance after your house is on fire. What you should be doing is pouring water on it. And you're like, I see flames coming out the window. Yeah, but I'm spraying water on your house. I'm putting it out. Okay, you're focused on the flames. I'm focused on the water. So in this case, the water is cooling off the red hot economy. It's putting the fire out. That's deflationary. Okay? You were supposed to buy inflation hedge way back when fire conditions were increasing, but not after the fire had begun. That kind of thing. Richard says, hey, question. The dollar is linked to which bond prices? Well, any of them. All of them. Hey, Richard, do you want to buy my 10-year T-note? And you're like, yes. All right, give me some money. Well, if you don't have US dollar, I don't want your money, Richard. You have to pay me in dollars. So it doesn't matter if it's a note, a bill, or a bond, or real estate, or a stock, or a car, or my PlayStation 5. If you're a foreigner, you're going to need dollar. That's it. It's a unit of account. It's a medium of exchange. Okay? So that's it, Richard. So it's not the dollar is linked to bonds only in the sense that all assets are priced in dollars. All assets, not just bonds. Okay, so Richard says, okay, so when bond prices are going up, which brings interest rates down, that's good for the dollar. Well, again, there's no good and no bad. Okay, why are people buying bonds? Jonathan, there's a link below the video to a free training course. It's probably an hour and a half that covers everything. Feel free to use that. Well, something else is falling, right? So you guys are saying for safety and for a safe haven, safe thing. So that's bad. That would be a bad scenario, but the dollar would perform well if foreigners are making that decision. What I'm showing you today is people are not making that decision, but the dollar is strong. You haven't even seen a strong dollar yet. Okay? We haven't even entered a recession yet. Okay? So when things are good, investors are buying not the bond market, but the stock market. The United States, in that scenario, would have their Americans selling bonds and buying the stock market. That doesn't do anything for the dollar. But if it has a positive effect on, let's say, sentiment for the future, an American has a good job, an American's making good money, an American has a stock portfolio and a retirement account that's going up, American owns his or her house, and the value is going up, so they decide to go to Walmart and buy a 70-inch TV. Or they go to the car dealership and buy a BMW. Okay? Okay? Or they buy $150 Nike shoes for their kid so they're cool at school. All of that is selling the US dollar. They're converting their money. Okay? Now, you can buy foreign assets, but those are not assets. That's consumption. But when you feel rich, you consume. You know, I find BMWs are boring. And I don't like my local dealer. But whatever, they're fine. They have less buttons than a Mercedes. I think I'm more of a Porsche guy now. My Mercedes cost me $1 a mile in maintenance. Not gas. I spent more on maintenance than I did on fuel. Okay, BMWs, yeah, I hate the dealers. They go in there and it's scummy. Porsches seem to be really nice. But all of that is selling. You see, I'm selling the dollar to buy euro. Okay? That's all. Cranky's got rid of his VW. It's really funny. Just a side note. I've had to buy parts for my Porsche maintenance stuff. And there's, right? We've bought Volkswagen parts for the Porsche. Right? I believe some Audi parts fit. And guess what? My foot brake is from a Lamborghini. And you're just like, I'm practically driving a Lambo now. It's, it's 0.1% Lambo. Anyways, so going to that, when things are good around the world, the dollar is weak. When things are bad around the world, the dollar is strong. And it has to do with the flow of capital. One of the interesting things that we're facing, and I'm pointing this out as a foreign exchange trader, is that the bond market's falling, the stock market's falling, and the dollar looks strong, but it really, it is, but it isn't. It would truly be strong if billionaires in Malaysia were moving money to the United States and locking up that 10-year T-note at 4%. That would be, an exchange of capital to an actual asset that provides an income. And you would see stabilization in the fall of the price of a 10-year T-note. So let's say we hit 4% just an hour ago. So if we find ourselves, let's say 3 weeks from now, we're at 3.5. What does it tell you? Somebody bought the 10-year T-note and locked in the 4% income. That would be true if it was a foreigner. That would be a true purchase of US dollar. That would be, direct strength. What we're seeing now seems to be mostly relative strength. And I think that's really cool, especially if you're trying to understand what's going on around you. Jazz says you can't see too many bad cars around the United States. That is true. And you'll see lots of like Hyundais, Kias, Hondas, Toyotas. They're all wonderful cars that drive 1 million miles. Ford F-150s, 1 million miles. Right? You can put 1 million miles on that thing. There's not a lot of bad cars anymore in America. That's true. Which is actually a big change from about, 20 years ago. There were a lot of bad cars on the road. But, hey, we got to cash for clunkers. Okay, so anyways. Well, here it says, now you can sell your Porsche above the sticker the day you drive it off. I don't think that's true anymore. I'd have to double check. But I converted assets into a vehicle, aka I bought it, a year and a half ago or something? 2 years ago? I think maybe just before COVID. I can't remember now. Time is really funny for me now. But I did make money. It's weird, huh? The Midas touch. Jazz says, come to Bulgaria. I'd love to go to Bulgaria. Is that right, Jazz? Yeah. I'd love to visit Bulgaria. I'd like to spend time on the sea. I'd love to spend time in wine country. Taste various, the wine in Bulgaria is fantastic. Well, Jazz, that makes me rich in relatively speaking. So that's good for me. Another reason to visit. I love the culture and food and the history. I would really enjoy visiting your country. I actually have not many friends. I have a few friends in Bulgaria that I could call up, but I think they're all rich in America now. So, but yeah, I would love to come visit. Okay. And of course, from my point of view, if it makes me relatively rich, then even better. Then just in reverse, though, you say, well, then you want to come to America, but then you would convert your assets here into nothing and you'd be poor. So it's difficult. Hey man, life is complicated. It's difficult. Do you see a continuation in the decline of dollar pairs? Well, Ahmed, it's two questions. It's a thesis for you to answer. I have my opinion, of course. And in fact, most people here already know what my opinion is, so for me to repeat it is irrelevant as well. But what is relevant? Okay, you would have to ask, why is the dollar strong relative to other currencies? So you'd answer that question. And then the second question would be, has anything changed? Let's see. I analyze quantitatively the markets. Okay. And I see, oh, right, well, I look at inflation, I look at GDP, I look at unemployment, I look at interest rates, I look at the differentials, I look at seasonality, I look at retail positioning, I look at institutional positioning of actual stuff, right? I look at the technical analysis and I do projections, linear projections, right? Base case, best case, worst case scenarios. And I go, oh, sell the euro dollar. Okay. Great. Cool. Has anything changed? Well, you might say psychologically, things might change. But that's not what's there. To me, the technical analysis is really a measure of current, like short-term psychology, if you will. But beyond the psychology, has anything fundamentally changed? That's what your question is. Why is the dollar relatively strong to the euro? So another way of saying it is, why is the euro so weak? And then the next part of it is, will it continue to be weak if dollar is neutral? Well, you might say, well, Wayne, this is weak because there are structural problems in the Eurozone itself. or that there's a war in the Ukraine and it's taking a financial, not just humanitarian impact, which is negative. So I'm like, okay, so is the war going to continue on? Are things going to still be structurally broken in Europe? And you're like, yeah, I think it's going to continue. Oh, okay, so you're a bear. When will the ECB raise interest rates higher than the Fed? You might say, never in a million years. Oh, well then sell. I care about productivity. So if productivity over 50 years averages 2.2 in the United States, and we're at 1.8, okay? We are below potential. So that's bad. But if inflation is 8.2, okay? How the heck could that possibly happen? How could you have more money than the entire economy can produce? Okay? Somebody did something and broke the system. By the way, 9% inflation is economically impossible. The economy cannot create that kind of inflation. Do you understand? It's impossible. So somebody along the way, somewhere, somehow, the economy is chugging along on a 50-year average of 2.2%. Okay, we call this GDP, gross domestic product. Okay? And somebody came along and added 10% of GDP into the economy. So you have the 50-year normal, and through borrowing and printing of money or creation of credit, 10% of GDP, then this is where the inflation comes from. So the fact that we have, let's just call it 10% inflation, it's because we have 10% more money than there should be money. That's where it came from. Okay. So, is that going to change? When is that going to change? So we're just talking about the United States, right? And we're just talking about Europe. Matus is 2024? No. Probably never. I mean, look, the worst case scenario is, I don't know what word it is. I guess bankruptcy. I was going to say default, but that's a wrong word. That means something. But what if, like, we'll go back to 2008. Let's say 25% of people lost their homes. No, I don't think it was 25%, but let's just say it was. That money is gone forever, isn't it? because you borrowed money to buy the house, which means that's somebody else's income. Somebody lent you money. Now, what makes me mad is when people say, well, screw that, I'm just going to go bankrupt and, whatever. We don't need to go there. But when you borrow, it's somebody else's income. They relied on you. And they probably have their obligations because you promised them and then you screwed them. So now they have to screw somebody else. And it's really bad. But that's one way of destroying the money. I believe it's the wrong way. If I was a politician, I would say, I don't want anybody to go bankrupt. I don't want anybody to get screwed. Okay? So the other way to destroy the money besides bankruptcy, and by the way, in other countries, you can't even go bankrupt. I think it's probably impossible to go bankrupt in Eurozone. But that's why they have 9% unemployment in a good year, because you're so afraid of hiring somebody. Anyways, so we could have, let's say, 20% of the S&P 500 go bankrupt and everyone that invested loses their money, assuming the government doesn't bail them out. That's why government bailouts are bad, because the sick and the weak need to die so the rest of the herd gets stronger and the best genes get passed along. Okay? Now, the second part here, the other way of fixing this is that the federal government needs to jack up taxes to slow the economy. We don't want the Fed to jack up interest rates to 10%. That'd be horrible. Because what will happen is they'll destroy demand, but we'll still have inflation. Because we'll still have too much money. Doesn't matter. The way for the Fed to reduce inflation from the Fed side is to do quantitative tightening. Right now, they're just jacking up interest rates. All right, get interest rates up to 5%. Hold it there. Then they'll find out there's still inflation. So then they'll focus more on quantitative tightening. Great. We will still have inflation. So the next wave is that the government of the United States, the White House, the Congress, the Senate, they raise taxes and take every single penny and pay down the debt. Not all of it, just $5 trillion to get to where we were before all this problem. So how many people think the U.S. government is going to raise taxes, bring in $5 trillion more, and not spend any penny of it on anything except paying down the debt? How many people think that's likely? Matrix says not in an election year. Well, then in what year? Is Biden going to announce a tax on everybody next year to pay for the stimulus? No. Well, the other way of doing it is not cut taxes, but cut spending. How many people here think the White House is going to announce a massive spending cut across the board? Everybody's going to cut. Every program. Retirement people are going to get cut. Welfare people are going to get cut. Homeless people are going to get cut. This department, that department, defense, healthcare. Everything is cut. Everything is cut, and it's all going to add up to $5 trillion. And then we'll go, and then everything's good again. That's the other way of doing it. Okay? But you have to understand this is a money problem. Okay? Do you guys agree with that? Inflation is because we have too much money. That's it. So, destroy the money. You can do it by destroying assets, like a house. Just lose your mortgage, it goes bankrupt, right? The bank loses money, you lose money, the bank sells it for 50 cents on the dollar, 40 cents on the dollar, and they get some of their money back, but they take a loss. Inevitably, there's a loss somewhere. Okay? And the money is just gone. Where'd the money go? It's just gone. Because that money was credit. Do you understand that? You never had any money. That came from the Fed. Originally, that all came back from the Fed. Somebody got credit from the Fed, like a bank, and then the bank distributed the credit as a mortgage to you, which they got as a credit from the Fed. So when you lose your house because you stop paying the mortgage, you've lost your credit and you've lost your asset. The bank now has your house, but they've lost the credit, and credit is destroyed, and the Fed just writes it off. That credit is gone. They can also sell the bonds they bought, so that they no longer have the bond. They sold it to somebody in exchange for money, which now is just ones and zeros, and then you just destroy that. Here's $1 billion. Here's what the Fed does. Delete. Now the $1 billion is gone. Not a problem. So, but that they can only do 5 trillion. They can't sell, the Fed can't sell something they don't own. Do you understand? They only have so much money in the vault. They only have so much gold in the vault and silver. They probably have some Bitcoin, right? I don't know about that. There's only so much dollars and credit in the vault. There's only so many bonds. At some point, they can't sell anything if they sold everything, right? And it wouldn't be enough to fix our problem. We would still have a $5 trillion problem. So that would have to come from a different part of the government. White House, Congress, and the Senate would have to destroy $5 trillion. Do you want to pay the $5 trillion? Okay. Okay. I think the distribution of that $5 trillion that came from the White House was so poorly done. My wife and I can't figure out why we got money. We didn't ask for it. We didn't need it. We didn't apply for it. We didn't do paperwork. One time it showed up as a check. Another time it just showed up in our bank account. Like, it was really weird. It was like different people are in control. We don't need it. So I took it immediately and gave it to waiters and waitresses and cooks that showed up to work. I thanked them for their service. No joke. The food was bad. There was no service. You had to pick up the food yourself. But I thanked the bartender personally. Thank you. And gave something like 40% tips because it was all my Biden money. So I gave it to people that needed it. The hotel didn't go out of business. The restaurant didn't go out of business. The waiters had a job. The cook had, right? The cook had a job. A bartender had a job. Well, nobody cleaned our room until we left. So I don't even know how that worked. So anyway, well, that's what I did. Look, right, Mayor, I could have just bought the stock market. I could have just bought some AMC stock, right? Or some GameStop stock, like some people did with their free money. I just gave it back to who needed it. Okay. But now I should be taxed for it. I didn't want it, didn't ask for it, but I got it and I gave it away. But now people should pay it back. Do you understand? The government should contact every single person in the United States and say, we need the money back. Hope some of it was Trump. Not all of it. not even half of it. But yes, it's not purely a Biden issue. That is true. Oh, right? My opinion, I think he was overscared and overspent out of fear. And when I hear him talking about Putin and nuclear Armageddon, we're all about to die and we should all go into our underground bunkers again, scares the crap out of me. Like, is he really that afraid? Probably. It scares me. It's too much hyperbole. Okay, but anyways, Nancy Pelosi. Well, no, but and that bothered me too. I don't understand the strategy of sending Nancy Pelosi to Taiwan. It creates real problems. It's real. Okay. The Chinese are not stupid. They're not interested in taking over well, maybe we all are. But at some point, you're picking a fight. Okay. And I see Americans being the one picking the fight more often than not. So anyway, so that scares me a little bit too, as a person, but also as an economist. I mean, this is all about economics. So, there are bad things out there and scary. And the one thing I'm grateful for and thankful for, besides you in my life, is that you and I can do something about it. Your neighbor is screwed. My neighbors are screwed. Because they can't do anything about it. Okay? One neighbor I have is a lawyer. My other neighbor is, we'll just say, works in Hollywood. No, not porn. Okay? So, they're screwed in the sense that they can't do anything about it. And they might be vulnerable. I don't know if a lawyer goes out of business when times are bad. Maybe someone in Hollywood can't get a project. But they have enough money. They could ride through 2 or 3 bad years and it'll be fine. They still sleep in a Tempur-Pedic bed while they worry about money. Right? But we'll all worry about money. But some of us will be comfortable and some will not be comfortable, right? We can be comfortable because we're like, wow, look at the stock market fall. Triple leverage short. Wow, look at everything crashing. Buy the US dollar. Fed's raising interest rates even higher. Sell gold. We can do something about it. And we're okay. And the way I look at it is when the markets are up, risk is high, and even stupid people make money. And some people make stupid money. This is where you hear about the hedge fund manager that made $1 billion in a day, like George Soros. I think that's dumb. Do you understand that? When somebody reports like, Paulson, right, made $1 billion in one day on gold, or some guy made $1 billion shorting the real estate market in a day. Yeah, that sounds really dumb to me. What an idiot. So when times are bad, like right now, the ones that just eke out 10 or 15% a year, while everyone else is losing 30%, makes you look like a frickin' genius. But you're just doing your thing. You're like, yeah, well, it's fundamentally and technically down, so I sold it. I'm making money. You're not a lot because you're not taking on a lot of risk. You're fine. You're fine. And I really want you to understand that because there are always busts. Always. And you'll be fine. You'll be outperformed when things are good because there are dumb people with dumb people's money doing dumb things and making stupid profits because they took stupid risk. Okay, profits are a function of risk. You understand? Okay, like let's do it this way. Okay, okay, how do we do this? Profits, like returns. Oh, man, it's so hard with the mouse. Okay, are a function of risk. The greater the risk you take, the greater the return you will make. So some idiot that made $1 billion in one day took on a lot of risk. George Soros made $1 billion in a day. What percentage return did he make? What percentage return? Nobody talks about that. Does anybody know? It was a ginormous bet. What they don't tell you when you hear about George Soros, oh, he's the guy that broke the Thai baht. Oh, he's the guy that broke the Bank of England. Yeah, and 3 years later went bankrupt. Oh, wait, what? Nobody talks about the trades that go bad, huh? That's the problem with the world. If you do this right, nobody will care about you. You're boring. You only make 15 or 20% a year. Well, here's the thing. When there's something crazy going on in the world, the market will be doing 30 or 40% a year. And you will look like you're underperforming. You're like, yeah. But you're not taking the risk. There's no way for you to make that kind of money. You're not taking on that kind of risk. You're just riding the beta. And then when things collapse by 40%, you're still making 20%. You're like, yeah, well, the only thing that changed was the direction, but one day you're selling, or let's say 1 year you're selling dollars, the next year you're buying dollars. And usually it's like you buy dollars for 2 or 3 years, then you sell dollars for 5 or 6 years. Well, Matrix, that's a harder one too. I know what you're saying, but yeah, if you have good health and a wonderful family, that's what brings you happiness. And if you have someone that you can share with, whether it's your experience or wealth or whatever, it's all good. But it's harder to wake up happy, even if you have good friends and good family, if you've lost it all. Okay. You know what I mean? So I think they come hand in hand. I know the cliche goes that rich people are sad and live a horrible life, and poor people have more honor and integrity and are closer to the earth and the land, and get happiness out of good food and good people. But then I drive through poor neighborhoods and it looks like hell to me. I see people on the streets scamming each other and stealing each other and shooting each other in the back for what? Robbing a liquor store to get what, $200? That I don't like either. So I understand that what brings joy and happiness are the relationships in your life, whether it's your family, your friends and other loved ones, your neighbors. Yes. And then, but I'm telling you, the next level of happiness comes from your ability to share and give back as well. So, yeah, the money will not bring you happiness, but it'll bring you some pretty cool experiences, and it does bring some comfort. But the most important thing is once you get enough, then right when you have excess, like you live in a big house, what's next? A bigger house? 2 houses? You get a fast car. Then what? A faster car? Like at some point, it's not hard to max out. So the next level is then it goes back to relationships. How can you share? How can you share? And purpose, right? I wake up early every morning because I have purpose. I know you're going to be here for me. You will be here. I have purpose. It brings me great pride, great pleasure. I feel like I'm doing good. I like to share, but I'm also coaching and teaching myself as much as you. It's a good thing. And I believe it adds to the universe. It's a good thing. That brings happiness. Yeah. Yeah. So, look, let's go back into here. Now you're like, why isn't he talking about CPI? Dude, I've been talking about it for a week and a half. We were here, then we were down here, and lots of people lost money. I don't care. It's not my problem. I've taught people what to do, and most people don't listen to me. It's okay. Jazz says it's about freedom. Yes. But it's funny though, because with great success comes great responsibility. And so you'd be surprised. I do know very, very, very wealthy people, and they're very, very busy people, and they have lots of stress. It's funny, they can do anything and buy anything. Like I'm thinking about one of my friends. He's got I think it's a 35 car garage. And every single car in there is way over 100,000. Some are many, many, many hundreds of thousands. So inside this garage, he has millions of dollars of cars. He can do anything you want. He can go anywhere and buy anything. And he's always exhausted, always spread thin. He's always hustling, but just slammed and stressed. He's doing a million things at once. But he has purpose. He's driven. He's just like you with 35 cars. He spent probably $1 million building his garage, right? So whatever, but still just a dude hustling in a complicated world, right? Following his dreams and aspirations, developing relationships and contacts, negotiating deals. Okay? There's only so many times you can go on vacation, fly to Pisa, stand there with 10,000 people staring at a leaning tower, and then go buy a crappy piece of pizza for 12 euros. And then you're like, dude, this sucks. Okay? You'd rather travel because you're on a mission. You're building an empire, you're building a business, you're building a deal, and you're going somewhere and you're meeting people and you're actually living a life, not staring at something, right? And that brings people happiness and pleasure. It's purpose. If you want to get down to it, purpose. Okay? Once you get your loved ones, okay? You make enough money so you can provide for your family. Okay? Your kids, your spouse, then take care of mom and dad, and all that's all cool. Then you need to make a little bit more money, and then you move your family to a better neighborhood. So now your neighbors, and let's say the culture of the neighborhood is more positive. And now you got that down. So you're in a better situation, better relationships all across the board. That's really good. And then, then you get the toys to kind of fill the void in your heart. So now you go to Rolex or something. I don't know, whatever. We all do it. And then what? Then you go back to okay, now you got all that stabilized. You can afford groceries. They're not going to cut your telephone line off. Okay, everything's fine there. Now what? Purpose. That's it. Purpose. Self-worth will bring you happiness. And I'm telling you, what we do here as Forex traders is unique because we are one of the very few individuals in the world that can control this chaos that's around us. Okay? Doctors and lawyers and firemen and police officers and factory workers and bus drivers and pilots and waitresses, so on and so forth, are helpless to all of this. Helpless. Okay? Helpless. They don't even understand. Some a little bit, some not at all, not even aware. And you can take care of your loved ones. And that will bring you great purpose. And even in a time of stress, you will be happy. Thank you for being part of my community, giving me a reason to wake up. Not just wake up, but wake up tired and joyful. You keep me sharp. You keep me focused. You keep me humble. We have fun. We're serious. We share our joys, our fears. We laugh, we cry. Thank you for being part of this community. It would be terribly, terribly lonely without you. So thank you for being in my life. If you're in my swing trading group or my day trading group, I will see you at 4 p.m. I'm giddy with excitement. For everybody else, consider joining FX Bootcamp. Okay? So peace on earth. May the pips be with you. May your profits be above average. I'll talk to you later. Cheers. Hey, that just happened.